Hey everyone, it's James at Yoreevo with our July 2021 Manhattan market update. And even though things are slowing down a little bit compared to the spring, we're still operating at record levels of demand for the summer. So if you look at the number of contracts that were signed this July versus the 2017 to 2019 average, we're up 61%. And I know since the beginning of the year, we've been throwing a lot of very large year-over-year increases at you. So what I put together was this chart, which shows you the number of contracts that were signed in each month, each year, going back 9 years. And then in the orange line here, it compares 2021 to the previous max. So you can see at the beginning of the year, we're basically at record levels. We're flat, and we've been significantly above the previous 9-year high each of the last, 6 months or so. And then this blue line up here is showing you that 61% that I mentioned comparing to the 2017 to 2019 average throughout the year. So we're actually at the largest year-over-year increase this month compared to the previous month in 2017 to 2019. So very, very strong demand. So even though we're seeing this summer slowdown, the year-over-year increases are actually getting a bit larger. But in general, I would just say very strong market, a lot of contracts getting signed. Not too much happening here in the price point. Looking at the price point charts, the only thing I would point out is last month we thought there might be a little bit of a slowdown at the high end, but we didn't see that at all. Basically, the high end stayed flat while the comp got significantly weaker. So now the high end, the $2 to $5 million range, is up 62%, which is basically in line with everything else. So across the board, all price points, we're seeing a lot of strength in contract activity. This is just the contract per week, nothing really noteworthy there. And then when it comes to listings, we're seeing the normal summer slowdown. As activity usually falls during the summer, you usually see sellers take some listings off the market. And you see that every year. You can see boom, boom, boom. Each of the last 3 years, it came down. We're seeing it bleed down. We'll see that again in August. And then after Labor Day, that's when everyone brings their listings back on the market. That's when buyers come back to the city. So the market activity is going to pick up significantly come after Labor Day. Nothing really doing here on the inventory by price point. And then on the pricing, a common refrain that we've had over the last 6 months or so was that downtown was doing better. And we didn't have any data to really point to because pricing is very much a lagging metric. But what we usually look at when we want to get a sense for what pricing is going to do going forward is look at inventory. Because as buyers have fewer choices, they get a little more aggressive with the choices that they do have. So what I thought would be interesting is I put together this chart which indexes the level of inventory to the beginning of 2018. And you can see basically for a couple of years, there really wasn't much of a change. You had the normal seasonal increases and decreases, but all the neighborhoods basically trended in line with one another. And that even happened coming out of COVID. But then you can see this peak right here. This was October. That's when we had the peak in inventory across all of Manhattan. And ever since then, well, actually two things. One, you can see here we have, this is Uptown, this is Midtown. And you can see Uptown and Midtown, the increase was a lot larger than what we saw in Downtown, which is blue. And ever since then, that gap has widened even further. So this is just showing you that there's less inventory available downtown compared to Midtown and Uptown, which have significantly larger levels of inventory. And consequently, there has been better price action in the downtown market versus Midtown and Uptown. And the poster child we've been using for the strongest market in the city has been the West Village. And so that's here in the green. And you can see the inventory for the West Village is down about 25% versus the beginning of 2018 levels. So there's basically nothing for sale in the West Village. So it's been a very, very strong market. So going forward, I would expect downtown to continue to be pretty strong and Uptown and Midtown to lag just because they have more inventory. But basically, when you are looking at a market and you want to understand what that market is going to do pricing-wise going forward, the first thing you should be looking at is the level of inventory today. So obviously, you might not have access to that data. So if you are looking at a specific neighborhood and you'd like to dive into that data, we're happy to go through it with you. We're also happy to run through what we're seeing in the market in our day-to-day operations and obviously help with any searches that you're working on. So feel free to reach out to us at info@yoreevo.com and we will see you next month. Thanks a lot. Bye.